Good afternoon, and thank you for taking the time to view this presentation on the SWOT analysis for Bank of America, presented at Full Sail University by Spencer Crume for the Business Intelligence, Leadership, and Communications course, hosted by Dr. Vicki Bealman. The purpose of this presentation is going to be ultimately to go over the results of the SWOT analysis done by myself on Bank of America, the company. But we're going to start off with the definition of what exactly a SWOT analysis is. Then we're going to implement that SWOT analysis method, and we're going to discuss some conclusionary result findings. So what exactly is a SWOT analysis? SWOT analysis is an analysis method that identifies internal and external factors of a business. Primarily, it consists of four components in its most common form. Those are two internal factors, strengths and weaknesses, and then two external factors listed as opportunities and threats. Bank of America, we're going to start off with the strengths. Bank of America branding value is very high. It has a diversified product and service offering. The strengths are also a domestic and international presence in the financial industry and the growth strategy that minimizes risks. Branding value. Bank of America branding value is very high. Well, why is that? It's because, according to global ranking in 2020, they maintained their number 6 spot in the global ranking, which was valued at $35.4 billion. They also have great name recognition. Bank of America currently is said to serve 1 out of every 2 households with at least one financial product. This helps lend to the idea that the majority of residents of the United States at least know who Bank of America is, even if they don't necessarily deal with them themselves. A diversified offering. A diversified products and service offering, which consists of their banking offering, which is consumer and small business banking. It's going to include traditional banking that the average consumer would use, but also private banking and some of those more specialized products for the more affluent clients. Also investments through their Merrill branded investment financial services company. They offer investment account and service options for both individuals and businesses, including everything from online-only self-directed offerings clear up through complex private wealth management strategies for the very affluent clients. Also looking at their lending, the Bank of America offers a whole host of different lending options between credit cards, mortgages, small business loans, and then even specialized solutions such as their medical practice management solution. Strengths is their presence. And in this presence, we're talking about their domestic and international presence in the financial industry. With this, they have global banking partnerships. These are strategic alliances with industry partners around the world so as to provide basic banking services for Bank of America clients when they are traveling abroad. There's also institutional banking. Institutional banking, both domestic and international, gives Bank of America the ability to provide for financial institutions and governments to both borrow money and house money in compliant and regulatory controlled ways. The next strength is that they have adopted a growth strategy that minimizes risk. This is, very simply put, their responsible growth initiative. Shortly after the financial crisis of 2008, CEO Brian Moynihan implemented the idea of responsible growth. And the purpose of responsible growth is to grow market share through proper means with the constant focus of this needing to be a non-negotiable, that Bank of America must always be growing market share. This growth must be customer focused, understanding that at the core of the Bank of America business, the customer or the client, as they put it, is the number one factor in their success. Growth must be customer focused. And this growth must be contained within the risk framework. The risk framework is comprised of a multitude of different factors, everything from compliance risk, reputational risk, financial risk, market risk, and also credit risk, just to name a few. By making all that growth that is strived for fit within inside the risk framework helps Bank of America to grow in a responsible way while minimizing the risks that they face. This is, to summarize, Bank of America has a high dependency on domestic offerings for their profitability. They are heavily reliant on the fintech trends, so as things are changing. Also, there is a weakness of reputational damage, which is related to previous financial crises that they still have not been able to fully. Profitability aspect, Bank of America is highly dependent on their domestic offerings for profitability, and that is simply put because consumer banking investments by Bank of America are simply not offered outside of the United States. Now, this can be for a multitude of different reasons, whether it be just different laws and regulations around the world, or just simply not wanting to have to house compliance in multiple countries. Either way, this has led to Bank of America being fully reliant on, or should say, the majority of their reliance being on the domestic market for their profits. So in regards to financial technology trends, Bank of America is heavily reliant on these trends as they focus on their digital banking initiatives. The digital banking initiative helps them for future growth because the company is looking at the future and not wanting to miss out on the opportunities that are there. However, this does have some potential weaknesses and negatives for the short term, in the fact that clients are needed to embrace these digital changes. And with a company the size of Bank of America and the length of time that Bank of America has been in existence, you're bound to see some resistance and pushback with that. And then this, of course, risks alienating those clients who are less tech savvy. Now, this can be in the the older clientele or just some of the more rural clientele that don't have as much access to technology. Either way, there is a risk of alienation here, and so Bank of America must be cognizant of this fact and also be careful in this respect. Also, the reputational damage related to previous financial crises. The financial crisis of 2008 took its toll on multiple financial services businesses, with some of them, like most famously Lehman Brothers, actually filing bankruptcy and no longer existing in our current world. But Bank of America, didn't escape this. They made a purchase of Countrywide Home Loans, which was not only very controversial, but also in the short term was very detrimental to Bank of America because Countrywide Home Loans was one of the biggest players, if you will, in the financial crisis and the housing market crash of 2007-2008. This resulted in a loss of stock value of approximately 50% from their previous high. And to this day, Bank of America has not fully recovered that 50% loss because of their perceived role as a whole in the 2008 financial crisis. Even with Bank of America businesses being, mostly unscathed through the 2008 financial crisis, their acquisition of Merrill Lynch, Pierce, Fenner, and Smith, who had taken a multi-billion-dollar loss on the bond markets, and the acquisition of Countrywide, the public perception of their role in the financial crisis was far greater than what their role truly was. The expansion of consumer products into foreign markets, this is a big one for Bank of America, great opportunity there. Acquisition of competing fintech products. Obviously, the world has continued to become more and more digital, so therefore Bank of America cannot lose focus on that as a great opportunity. And then, of course, innovation of current technology, both internal and external, to make business more efficient. Look at those foreign market options. The expansion of the consumer products into foreign markets. This is just an untapped market that, there are many municipalities, many countries out there that have large populations of unbanked clients, whether that be for political reasons in their countries, or just not trusting the banking systems, or just not having enough of a financial footing to utilize a banking services. Bank of America has a great opportunity to explore these areas and see which ones make sense to go into from a market expansion standpoint. This would be comprised of expanding consumer banking and investments into these regions. Also, of course, financial planning services, and then moving on into lending and business funding. The three of these areas combined make for a client that is very loyal once all aspects are being fully utilized. But it has to start somewhere small, and that usually is going to be something as simple as like a checking or a savings account with debit card access and the ability to do financial management from there. To acquisition discussion, the acquisition of competing fintech products. And here's the big reason why. Development expense is great. So with needing to innovate and develop new ways of managing finances, Bank of America is better served by looking for ways to actually take and acquire rather than develop. Now, by acquiring, they can purchase technology from third parties, and that can then be rebranded and repurposed to fit Bank of America's needs. And even further, acquiring the companies that make those technologies, so that way future updates and expansions are built into the Bank of America infrastructure, as opposed to having to be purchased or service contracts being purchased in the long run. And also, this gives Bank of America the ability to acquire these rival fintech startup companies prior to them becoming a true threat. Then moving on to innovation. And this is innovation of current technology, both internal and external. The big place where this is a great opportunity is the consolidation of systems. Currently, Bank of America uses multiple financial software systems for various functions. By consolidating these, we're going to eliminate redundancy, and this would improve efficiency for employees. A more efficient employee has the ability to help more clients within a day, and therefore has the opportunity to potentially grow the business through other sales opportunities. Also, streamlining of the lending process. There's a current multitude of redundant loops in this process, and it's the difficulty with this is the same information is passed from department to department and passes back through those same departments multiple times. Each time this passes through, it's not always looked at by the same individual, which can increase errors, but also increases the need for more explanation, as maybe that individual is not fully privy to the entirety of the client situation as it has been explained to previous individuals. So streamlining this lending process would allow for Bank of America to process through more loans and also eliminate errors, which would help to lessen risks in the credit world. Moving on to threats. So we're going to look at the threats of competition of fintech-only financial organizations. So these are companies that do not have a physical presence. Also looking at the impact of financial markets, crises, and recessions on the banking business. And then lastly, regulations on consumer data and financial services and how those affect Bank of America. Is competition. The competition of these fintech-only financial organizations. Several years ago, the idea of financial technology started simply with telephone banking, being able to call in and speak to a phone banker in a call center somewhere that allowed individuals to handle certain things such as balance transfers, savings account maintenance, and so on and so forth, without having to go into a physical branch. This expanded into a lot of what we see today between automated teller machine access, online banking, mobile banking, automatic bill pay, you name it. Each of these different technologies, while utilized by Bank of America, can be expanded upon and simplified. And that's exactly what a lot of these new financial technology companies are doing. They are coming out with a model that pits the physical versus the virtual presence and really downplays the necessity of having a physical banker that you can sit down with face to face. Now, this being said, Bank of America has traditionally been a bank strictly with a physical presence. This puts Bank of America at a disadvantage due to the overhead costs and the increased operating expenses with a physical location plus the staff therein. These expenses can actually draw funds away from other business initiatives such as the digital innovation. And that brings us into the digital banking evolution. Now, digital banking is a section where Bank of America is very dominant currently, but they have to be cognizant of these startup companies such as Chime and MoneyLion and even to an extent Capital One Banking, because they don't either have a physical presence that you can work with, and quite often, most times don't even have a phone-based presence where you can work with, an individual. Everything is done self-paced and through apps on the individual cell phones or tablets. Bank of America must focus on this area in order to eliminate this threat and continue along their evolutionary and innovationary path that they have been so far. Then moving on to financial markets, crises and recessions. I like to call these the common factors or common threats that tend to affect most businesses. So financial markets are a little individualized for financial services companies, but can also affect other businesses as well. So financial markets, things as the stock market, the bond market, the foreign exchange markets, that price the American dollar versus other currencies. Each of these can result in fluctuations of not only value but also increased volatility and risk. Bank of America having a very large investment portfolio in markets around the world, this is an area that is a constant threat for them. And then, of course, crisis. So we've seen in the year 2020, this year, just the effects of a medical pandemic on the people, between businesses that have either had to file bankruptcy or have been looking for ways to try to keep their doors open, to individual families who have to worry about how to put food on the table or how to pay their bills. Oftentimes these situations result in those families prioritizing those things that are the most important to the survival of their family. And when you look at a company like Bank of America that is reliant on the interest revenues from credit card payments, mortgage payments, car payments, auto loans, things like that, if these families prioritize away from making those payments, that's going to be a loss in revenue to the bank. Not to mention the different programs that could be put into place, things like forbearances, where families may not lose their home, but they are not required to make payments under that scenario. So each of these adds to that concern. And then, of course, recessions. Recessions impact everyone, not just companies and financial institutions, but banks often get hit hard by recessions. Again, for many of the same reasons why crisis affects banks. During a recession, money does not flow freely. Individuals do not borrow as much because they simply can't, because quite often they don't have a means by which to repay it. So this is an area that Bank of America always has to keep an eye on, so that way they can do their best to mitigate this. And lastly, taking a look at different regulations. Regulations on both consumer data and financial services. just a couple of them where we're looking at banking regulations. This has to do with things such as, anti-money laundering laws, commingling of funds regulations, your depository requirements, FDIC insurance clauses, you name it. These are all different areas that not only does the bank have to follow, but these regulations are created and modified by legislative bodies from the local level all the way up through the national level. Now, this can create the need to monitor many different areas, which creates a very large threat here, and ties into some of the newer ones that we've seen in the consumer data and privacy. Now, this is a newer area of threat. However, it's one that banks have always had to deal with to an extent. Banks have always had to fulfill their duty to protect the data and privacy of their clients. The difference now is that there are several states who have put on the books laws that tighten these up and create very specific guidelines and regulations around this consumer data and privacy. Not only has this created more oversight for Bank of America to look at their employees' actions and also their practices, but this has also increased the burden on even things such as marketing and compliance, in that with some of these privacy laws, it greatly reduces and restricts the ability for Bank of America to solicit business from both current clients and prospective clients alike. So in conclusion, Bank of America is a bank that has a challenging future. Many companies are looking at the ending of this pandemic time to see exactly what the country is going to look like, what the world is going to look like. And quite frankly, it's a hard question to answer. So Bank of America must play on its strengths, use its brand, use its digital innovation platform, and continue to do all it can to mitigate those threats and capitalize on those opportunities. They have to continue to grow responsibly. Bank of America has put into place that responsible growth mantra. They must continue that, and they must basically live that in order to continue to improve as they have. And then also the need to diversify the offerings into global markets to decrease concentration risk. Simply put, it is difficult when a bank has a very specific market, and expanding beyond that market is going to help them to capitalize on those opportunities, decrease some of those risks, and potentially eliminate some of those weaknesses as well. For taking the time to view and listen to my presentation today. Have a great day.